We're jumping straight into New Fortress Energy today.
Right.
Everyone is watching the price action, but the real story is the high-stakes game of chicken playing out between the company and its lenders.
It really is. I mean, the definition of high stakes. You look at the charts and it's almost dizzying. It's the kind of volatility that makes even seasoned traders a little queasy.
Right. I mean, we are talking about a stock that has seen a year-to-date decline of, what, over 90%?
90%.
Just think about that number, total value destruction.
Yeah.
And just when you think it's over, you see these sharp 20% rallies in after hours.
It's so volatile, so messy, and, fascinating. It's a classic sign of a distressed asset the market just can't quite figure out. The algorithms are confused. Is this going to zero? Or is this a huge comeback story?
Exactly. So this isn't just about fluctuating energy prices. This is a distressed turnaround story. The tension is real.
Yeah.
You've got a company that missed payments back in December 2025.
A technical default.
A default, yes. But the market seems to be sniffing out a potential survival story, not an immediate liquidation.
And that's the whole game. The market's trying to decide if the assets are worth more with the company alive, or if the vultures are about to circle and pick it apart. It's a binary outcome.
And those are always the most dangerous yet potentially profitable places to be.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
We're looking at a company today that is, yes, technically in distress, but it's also sitting on some incredibly valuable infrastructure. It's a real puzzle.
And our job today is to put the pieces together so you can see the whole picture.
Before we get into the weeds of, debt covenants and gas terminals, do us a quick favor. If you want to cut through the noise of complex market news, just hit that subscribe button and give us a like. It really helps us out and keeps you ahead of the curve.
So, okay, let's unpack the bull case. Because looking at a chart that just goes straight down usually sends people running. Why would anyone even touch a stock that's down 90% and missing debt payments?
That is the billion-dollar question, isn't it?
Yeah.
And the answer, really, it lies in the hardware. It's all about the intrinsic value of what they physically own.
We're not talking about software or goodwill here.
No, not at all. We're talking about massive physical infrastructure, specifically the Gas-Sul FSRU terminal in Brazil.
Right, and for anyone who doesn't speak the language of energy acronyms, and boy, does the energy sector love its acronyms, FSRU is a floating storage and regasification unit.
Which sounds incredibly technical.
It is, but think of it like this. It's a giant ship that's basically a floating factory. It takes supercooled liquid natural gas, warms it back up into gas, and then pumps it into pipelines on the mainland. It's a critical link.
And that specific terminal in Brazil, that's the crown jewel. The bull argument is that this thing creates a massive moat.
Moat is the perfect word. I mean, think about it. You can't just pop up a new LNG terminal overnight. This isn't like spinning up a new web server.
Yeah.
The regulatory hurdles, the construction time, the capital, it takes years. And New Fortress already has this infrastructure in place. Meanwhile, Brazil has these critical gas-to-power needs.
So basic supply and demand.
Exactly. Once those pipes and terminals are on, they're incredibly sticky. Brazil needs the power. They can't just switch providers because the physical pipe is connected to this specific terminal. That's why lenders might not want to just foreclose and sell it for parts. The real value is in the operation.
And the numbers, if they can actually pull off this turnaround, are they're staggering. I was looking at the forward projections, and while things look grim now, I mean, $1 billion loss, the narrative just completely flips by 2028.
It's a complete 180.
Yeah, we're talking a projection of $3.8 billion in revenue and over $500 million in earnings by then.
Okay, let's just pause on that. The swing there. Moving from a $1 billion loss to a $500 million profit. That's a $1.6 billion swing in profitability.
That's the kind of thing that makes investors pay very close attention. It suggests that if, and it's a huge if, they can restructure the debt and get these things running, the company isn't just surviving, it's printing money.
And we are seeing some signals that the big money thinks this is possible. It's not just retail traders gambling. You have to look at the credit ratings.
Yes, this was a huge detail. I think a lot of people missed it.
Yeah.
S&P Global actually upgraded their credit rating in late November 2025.
Which sounds completely backwards, doesn't it? The stock is crashing, they're missing payments, and the rating goes up.
Right. They moved them from selective default up to CCC. Now, look, CCC is not exactly investment grade.
No, not at all.
But the upgrade itself, that's what matters. Why is that so important here?
It's all about the implication. Selective default basically means you've failed. Moving back to CCC is the rating agency signaling they believe the company is viable enough to restructure. It's a message to the market that the lenders are at the negotiating table, not just calling in the liquidators.
And that negotiation is basically official with the forbearance agreement.
Exactly. Lenders don't sign those if they think the company is hopeless. They just seize the collateral. But they signed a deal to not pull the plug, giving them runway through January 9th, 2026 to figure this all out. It's a stay of execution, but it's also kind of a vote of confidence.
And there's one more mechanic we have to mention, the short interest.
Oh, it's huge. This is where the fireworks could come from.
32% of the shares are shorted. That's an incredibly crowded trade. 1 in 3 shares is a bet on failure.
It is. And when you have that many people betting against a company, any little piece of good news, a restructuring deal, a permit approval, it can trigger a massive squeeze.
Because all those short sellers have to buy back the stock to cover their losses.
Which creates more buying pressure, which forces more shorts to cover. It's a feedback loop. You're adding jet fuel to a potential fire.
Okay, so that's the dream. The company restructures, Brazil turns on, shorts get squeezed, stock goes to the moon. But we have to be realists.
We do, and we have to look at the other side of this coin. And, well, it is a very heavy, very scary coin.
Let's switch gears to the bear case. Because as exciting as all that sounds, the financial reality right now is just... it's terrifying.
It is. I mean, if you look at the balance sheet, it's not just bad, it's inverted.
Inverted is a very polite way of putting it. Break that down for us. What are we actually looking at?
Okay, imagine you bought a house for $1 million. The market crashes, and now the house is only worth, say, $130,000. But you still owe the bank $800,000.
Ouch. Yeah, that's not good. You're completely underwater.
You're drowning. And that's basically New Fortress Energy right now. They have about $8 billion in liabilities, but their assets are valued at around $1.3 billion.
Wait, say that again? $8 billion in debt against $1.3 billion in assets.
Correct. It is a massive, massive hole to dig out of. That's why the stock is down 90%. The equity, the shares we can buy is technically crushed under that mountain of debt.
And in a normal bankruptcy, the equity holders... they get nothing.
Wiped out. The debt holders get paid first, and there isn't even enough to pay them, let alone shareholders.
And this isn't some theoretical problem on a spreadsheet. They've actually run out of cash.
They have. In December 2025, they missed 2 key payments, a $30 million interest payment and another smaller one.
And I want to be clear. Missing an interest payment is a huge deal. It's not like forgetting to pay your cable bill.
It is the biggest deal. That is officially an event of default. Now, that forbearance agreement means the lenders agreed not to sue them yet. But the default happened. The company is in breach of its contracts. They are living on borrowed time, literally.
And while the financial side is terrifying, the operational side has its own risks. We talk about how valuable that Brazil terminal is. But it's not actually running yet, is it?
No, it's not. And this is the execution risk. You can have the best asset in the world, but if it's not turned on, it's just a giant expensive paperweight.
So what's the timeline? When does the cash spigot turn on?
Well, they've put out timelines to restart the Gasul terminal by either July 2026 or July 2027.
2027. I mean, that feels like an eternity when you're already defaulting on debt.
And that's the risk. July 2026, great, manageable. But if regulatory issues or supply problems push it to 2027, that's a whole extra year of burning cash. Every single day that terminal isn't running, the company is bleeding. And with an $8 billion debt load, they really can't afford to bleed.
It's a race against the clock. They need the cash flow to pay the debt, but they need time to get the cash flow started.
And the lenders are holding the stopwatch, and we have to just be really clear about the zero risk. We touched on it, but people need to understand what Chapter 11 bankruptcy usually means for a common stockholder.
Yeah, let's go there. Because sometimes people hear restructuring and they think it's, I don't know, just reorganizing the office.
No. If this restructuring happens in bankruptcy court, the equity holders, the people owning the stock, they almost always get zero, wiped out. The lenders take ownership of the company. So if you're buying shares now, you are betting they can do this outside of court. Because inside of court, you probably lose everything.
And the recent performance, well, it doesn't exactly inspire confidence. Q3 2025 revenue dropped over 40%.
And net income deteriorated by, almost 2,700%. The business, as it is today, is shrinking fast. That's why everything hinges on that Brazil terminal. It's the only engine strong enough to pull them out of this nosedive.
So we've got this massive potential reward and a total wipeout risk, the ultimate high-risk play. For people watching this, what should they be looking for? What are the key dates?
There's a very specific calendar here. The next big hurdle is March 2026.
What's in March?
The credit facility extension is up. They have until then to get a new deal done. If we get to mid-February and we've heard nothing, that's a bad sign. If we see news of a new financing package before then, that's the green light.
Okay, so March is the big deadline. What about earnings?
Q4 2025 earnings should be out in late January or early February. And look, nobody cares about the earnings per share number here.
Right, it's about survival signals.
Totally. It's all about guidance. Last time, management gave no guidance, which is basically code for we have no idea what's going to happen. If they come out and give specific guidance for 2026, or better yet, confirm that July restart date for Brazil, that's a huge signal of stability.
And speaking of Brazil, any news about Gas-Sul or ANP approval, that's the Brazilian regulator, is critical.
Absolutely. If the timeline for July 2026 gets confirmed by the regulators, the stock will likely move higher on that news alone. If we see headlines about delays, the whole bull case starts to look shaky.
There's also that little issue with NASDAQ, right?
Yeah, it's a bit of housekeeping, but it matters. They got a notice for delayed filings. They have 180 days to fix it. It's not the main risk, but if they get delisted, a lot of funds are forced to sell, period. So just watching for them to file their 10Q is a box they have to check.
And what about the big picture? Is the world against them too?
Actually, no, the macro picture helps them. Global LNG demand is very strong. Energy security is a huge priority for governments everywhere. They're selling energy, not luxury handbags in a recession. The world wants what they have, and that provides a bit of a safety net.
Okay, so let's try and wrap this all up. What is the trade here at the end of the day?
It is a binary outcome, a distressed turnaround play. That's it.
If the restructuring works.
Those Brazil terminals are worth a fortune. The short squeeze could kick in, and the stock could see a massive relief rally. I mean, we could be talking multiples of the current price.
And if it fails?
The $8 billion debt load crushes the equity, stock goes to zero, the lenders get the keys, and the shareholders go home with nothing.
It's that stark. But that's why we're talking about it, so you know exactly what the bet is.
Precisely. You are not investing in a stable company here. You're betting on a negotiation between lawyers and bankers.
And here's where it gets really interesting for me. I want to leave you with this final thought. The market has priced this for bankruptcy. It's assuming the worst. The question you have to ask yourself is this. Do the lenders really want to own and operate gas terminals in Brazil?
That's the pivotal question.
Do bankers want to put on hard hats and manage regasification logistics? Or do they want New Fortress to run them? Because New Fortress actually knows how to do it. The answer to that question determines everything.
It's the hidden leverage, the hassle factor for the lenders.
Exactly. It's a game of chicken, and maybe, just maybe, the banks are the ones who blink first. Thanks for tuning in to the Easy Money Show. Keep an eye on those March dates, and we'll catch you on the next one.
Stay savvy, everyone.